Hi, Scott. Welcome to Venture with Grace.
Hi, Grace.
So I'm sorry, like we just saw each other at the LG conference last week. And by the way, before we start, I want to give a quick shout out to Kevin from Rockhouse Ventures, who are so amazing to let me use your office. And also, like, I really appreciate my friend Michael and David, who also offered their office. I'm in the very, very last minute of my chaotic tech week experience so far, but thank you guys so much. Anyway, Scott, you're like one of the most knowledgeable person in I feel like the automotive and in general, like maybe manufacturer and the car space in general. So you have done M&A and then you have worked at I would say like the Chrysler was your first job, I believe. And like why don't we start with like what were some key takeaways early on in your career that kind of shape you into an investor today at BMW I Ventures?
Yeah,
Sorry, like I almost missed the I, but
you can't forget the I.
you can,
It would
yeah.
make sharing my email much easier if there wasn't an I in there. People wouldn't. It always gets dropped. But yeah, no, happy to share. So, yeah, I started my career at Fiat Chrysler. I was in their finance leadership rotation program. Spent around 3 years there. Worked in 4 different roles, and it was really a formative experience for me to start my career because I was able to just see so much in such a short period of time. And so, through that period, first I started on a team that was negotiating to create a new joint venture financial services company, which became Chrysler Capital, for all of the U.S. vehicle sales. And so this was a moment where I could come in and fresh out of school could see and touch all these different areas of an automotive company because the financing touches, all these different aspects. From there, I found an opportunity to go live in Mexico City, and then had the idea proposed to essentially replicate the same structure, but in Mexico. So then got the chance to kind of take the reins and lead negotiations to create what became FCA Financial Mexico, that now finances most of the U.S. or the Mexican vehicle sales for the company. From there, I spent some time in manufacturing at an assembly plant as a project controller, and then moved to the product development team and worked on electrified powertrains and the global small engines. And so got to see like the real like product development process and how that works in a really large industrial setting. I think one key takeaway for me there was getting to see a lot of stuff was very important, but also the folks that I worked for in that role. I was blessed to have multiple supervisors that were really invested in my career, and as I continued to perform well there, they went out of their way to get me more exposure and opportunities that really just enriched the whole experience.
I wonder, so like I think that sounds like an amazing experience. I wonder when it comes to actually building the investing strategy for a company like Chrysler, or later on, like you were at Truck Euro, where you were in charge of like the strategic finance department, and then you worked on a lot of like M&As. I wonder how do you pick which company to buy for a company that's who are like producing um these like vehicles. And I wonder like when it comes to the bigger sectors in the domain of automotive, obviously we could think of the autonomous side of things, there is the battery side of things, and then there is manufacturing side of things. There's some really big sector. Since you're the expert here, can you give us a kind of like general outline on like what goes into producing a car, and like which side do you feel like startups and like M&A opportunity should empower the company to do better, basically?
Yeah. Yeah. So, yeah, I think for, well, maybe just to back up. So from you mentioned Truck Hero. So this was a private equity backed company in supplier, both supplier to the automotive space and also a direct to consumer provider of automotive aftermarket accessories and parts. So this was an interesting role to like leave from Chrysler and go into because I had exposure and ownership over the full FP&A and strategic finance function. And that meant everything from roll-up acquisitions. We sold the company through a large LBO, and we did dual track that with an IPO. So I got to, really build my experience in transactions, but also worked with lots of subsidiary companies on strategic and operational improvements, across the company. So from that, I got to see the breadth of an organization and how it operates from the board level all the way down,
Mhm.
and in a lot of different small manufacturers that we were rolling up into one, larger company, and how those small manufacturers, worked and operated. So, then to kind of answer your question here, uh, the interesting thing about those experiences is that it's really given me a great background to or context to draw from for when I'm looking at different companies for a potential investment, because I've worked on an assembly, at an assembly plant and on the, spent time on the floor there, and worked with plant managers from smaller manufacturers that kind of grew up to big, family manufacturing businesses. And
Mhm.
so through the automotive ecosystem, which is what we're investing in at BMW I Ventures, there's so much. There's so much that actually touches the space, and it starts all the way through the supply chain. So there's lots of supply chain automation and forecasting that needs to happen. There's lots of movement of goods and supplies through that value chain. There's, of course, the manufacturing piece where there's robotics and automation solutions that are required, and solutions to help with the workforce there. And then, of course, you've got the product development side that's got high performance computing that you need to run big simulations to develop products. You've got advanced material sciences for both structural and battery materials that's taking place. And then there's the whole sales and marketing function that is touching consumers directly or through the dealer networks. And so there's dealership software solutions. There's financing that needs to happen. There's insurance that happens, and that's just like kind of through that value chain. And then you start to kind of play it back and say, okay, well, what about the supply chains that go into battery materials? There's lots of work that and interesting opportunities through the battery value chain. Or we're invested in a rare earth recycling company, right? That these rare earth elements are used in the permanent magnets in motors, and so there's just so much that ultimately that ultimately touches this space.
I have like a piggyback question on that. I really like what you said about like these different subsectors, like the robotic manufacturing, product development, simulation, advanced material science, and all that kind of different subsectors. Among these subsectors, like which one would you say actually? Oh, by the way, hi Todd, say hi to the audience. So when you're thinking about like these big sectors, like which sector do you feel like occupies the most amount of like it's the most like capital intensive, and which part do you feel like the bigger like car companies like BMW or like other amazing car companies like they're actually like spending a lot of time and resources on in general?
Yeah. So what I like about this role is there's a pretty even split between pure play software and what I would then call like hardware or deep tech, or system level hardware like robotics, opportunities to look at and invest. And so capital intensity is something that we spend a fair amount of time looking at. And as a venture fund that is really independent in nature, the way that we're structured, this is a $300 million fund. It's the second fund that we're investing out of. Writing checks of 5 to 10 million when you've got a capital intensive business can be, you can run through that pretty quickly. And so part of the key there is building big syndicates. So we'll lead rounds. We'll go through, we'll fully underwrite opportunities. We'll go deep on diligence. And then we'll build syndicates all around us of both financial and other strategic investors to help, first of all, help understand and underwrite that capital intensity, but then also to actually have enough capital on the sidelines and in the current round to really help those companies be successful. So within that, I would say some of the more capital intensive areas that we're investing in is really through this transition to electrification. And so this is, we're looking at battery materials, battery supply chain, like lithium extraction and refining, rare earth elements as well that's going into the motor. So everything that's really supporting this transition to electrification. There's, these are big projects, that infrastructure projects essentially. And, we're coming in at a point where there's still some technical risk that needs to be mitigated. And then beyond that technical risk, right, is the scale up of it's essentially a processing or manufacturing facility. So there's big capital intensity that runs through these projects. And I would say that the critical piece is to have the right partners all around the table to both really help underwrite the risks there and understand and kind of frame that up. And then also to have a grounded view in what are the best technologies, what can really disrupt the value chain, and ultimately create and capture a lot of value.
Mm. I wonder how, so like I want to maybe dive into the electrification segment, like which I feel like you mentioned about this in like a different podcast about like how like electrical car or like the battery how the battery work. So it's technically two type of chemical came together, and then there is that kind of created lithium. I'm sorry, like I could be completely wrong. But anyway, so from the chemical perspective, I guess what goes into electrification? So besides the battery part, and then there must be like maybe someone manufacturing the screen, and then like how does the electronic part actually implemented into like a traditional car, and like about that, like so what goes into the manufacturer, what goes into the technology. And since you also, I know that you took a course in University of Chicago about like innovation and commercialization, how does a technology actually commercialize into the market? Because I would imagine there's a lot of risk involved with is my car going to be on fire tomorrow kind of thing. So what goes into like actually creating an electronic car
Yeah.
or
Yeah.
electrification?
So the very short answer is there's a lot that goes into it. But perhaps the more interesting answer is that less goes into it than a traditional internal combustion engine vehicle. So, and
Interesting.
that's really
Okay.
what's part of the promise behind electric vehicles is not just the benefits for the environment and the fact that you don't have tailpipe emissions, but it's actually that it's a simpler vehicle. There's a lot
Mm,
less moving parts there. There's a lot less maintenance that's ultimately required. And as the cost curve has come down on batteries, which is taken some time, but there's a great chart by Bloomberg that's out there that shows the price per kilowatt hour over the last decade or so, and it's come down by a factor of 10x. And there's lots of reasons for that, but a big piece of that is just scale, and that's ultimately the price of energy on an electric vehicle is going to cross over and is very close to crossing over, or may have already even crossed over, depending on how you look at it. The efficiency on that energy that's being used in the by a gasoline combusted engine. So I think that's maybe important just to kind of start with, is like, how did we get here, and why is this trend happening? Now, within the vehicle, you've got the battery, of course, like that's a core piece of the technology that needs to happen. And like you alluded to, right, there's essentially an anode and a cathode, which creates this. You're able to create a chemical reaction between that shuttles electrons back and forth, and lithium ions, and in doing so creates energy, and that energy can be used to power the vehicle. Working sort of backwards then through the value chain, there's fairly complex value chains associated with battery technologies, and so and the interesting moment right now is the scale up for that. And despite some of the more salacious headlines that we all see about electric vehicle sales right now, the reality is that the overall growth rate may be slowing some, but it's still growing, and it's still growing quite rapidly. So, this is, in our view, a very durable trend that is investable behind, despite sort of the puts and takes in any given year.
Mm,
But these value chains, right? Just to maybe round it out, you essentially have a battery cell, which is kind of like the core unit of the battery, and you've got lots of these cells that are stacked up either into modules or maybe directly into a pack, and that then goes into the vehicle, right? And think of that as like thousands of cell phone sized batteries almost that are going to go into this pack, into the vehicle. Now, to get to each one of those cells, you've got all of the material in manufacturing that needs to happen to create those cells. So you've got cell manufacturers that can provide into the pack. You've got all of the materials that flow into the cell directly. So generally that's split between the cathode active material and the anode material, which is mostly graphite and maybe some silicon. And then behind that, you've got the raw materials essentially that are flowing into that. So on the cathode side, most importantly is, and probably the highest profile, is lithium, but
mm,
also depending on the type of chemistry, like nickel-rich chemistries leverage metals like cobalt and nickel. LFP, which is a less expensive cathode material, which is lithium iron phosphate. Doesn't use the nickel and cobalt, which is more expensive. So there's trade-offs between performance and safety and all sorts of other considerations that need to be taken there in terms of your ultimate battery design.
mhm,
But just hopefully that gives a little flavor of how you go from literally extracting lithium from brines or from hard rock
mhm.
in various areas, processing that lithium, getting that lithium into a cathode active material, and mixing all of that and blending it together, and then putting that into the cells, and then into the pack, and then into the vehicle. So there's big value chain there, and it's scaling up rapidly, and so that's why it's an interesting place to be spending time.
I wonder, I really like what you said about like, it comes down to lithium, and then there is like the battery design, there's like the pack, and then so I guess like basically instead of like a chemical, people like really commercialize it into a product. During this period, there's like a lot of like I guess um I would say maybe manufacturing component to, and like also sales component in each um small sector. When it comes to like acquiring a particular type of technology versus acquiring a particular type of product, slash manufacturing technology, um, what's your thought process on like what should be creating in-house by a car company versus what should be acquired from like maybe a startup or a domain expertise company?
Yeah. Yeah, so it's really just a trade-off in strategy. So, I mean, most technologies follow a pretty particular pattern, which is once the technology has reached a critical point
Mhm,
where it's essentially good enough and it's
mhm,
diffusing, you start to get a lot of specialization and modularization that happens throughout the industry or throughout even like a technical stack
yeah,
on a software side. This is a pretty kind of well-known phenomena. And what OEMs, a big piece of what they're doing, right, is coordinating like their asset and process, asset coordinators and really control the processes and all of the interfaces in between various pieces of technology. And so certain pieces of core technology stay in house because that might create competitive advantage. So, traditional OEMs have retained a lot of the powertrain in house and find competitive differentiation around that. Whereas something like, say, a tire, right, it's far more efficient to have a tire manufacturer that supplies tires to, across the system an ecosystem, and then you have an OEM that's coordinating around the specs and what that needs to look like. So in a vehicle, there's thousands of components, and so many of the traditional OEs are don't bring a lot of that technology in house, and instead have really modularized and focus on coordinating that. And so that's created a very optimal and essentially a very low cost end consumer vehicle. Now, with electric vehicles, you've got a new architecture shift, and that architecture shift can really create problems against a really optimal modular architecture. And so you see companies like Tesla and others, right, that are highly vertically integrated, and that can be a very strong strategy to commercialize and develop a new architecture for the industry. And so you're seeing a lot of they've really benefited by having a very tight understanding of battery and electrification technology, of their software stack, of their autonomy stack, right? That's all done in house. And so the question ultimately is just a trade-off in strategy. And so thus far to date, it's clearly paid off for Tesla. Going forward, as the rest of the industry continues to shift over to meet demand for electric vehicles, I think you're seeing a variety of strategies employed by OEs at various degrees of vertical integration. So it's really a trade-off in strategy, and I think the most important piece is to really have that coherent strategy and be investing your resources correctly behind that to try to differentiate in the marketplace.
I wonder, you mentioned about Tesla earlier, like, I wonder when you are creating an electronic car from scratch versus like you building a car, like manufacturing a traditional car and then adding the electronic component. Um, from the manufacturer perspective, so first of all, like, should people be acquiring manufacturing just manufacturers or should they be like partnering up with industry players that are like basically people in Detroit to actually creating these like different parts and everything, like just like following the traditional structure, but like by basically acquiring different things but only producing, having your own manufacturer to produce the most core competitive advantage product. I wonder what's your thought process on like, the electronic car versus traditional cars manufacturer. What should they kind of look like? And what are some big trends in manufacturing in general?
Yeah. So, uh, yeah, I think, well, there's certainly it could be an interesting time for the corporate development groups at these automakers to look at some of the new entrants into electric vehicle space, as partners or acquisition targets to look at those new technologies. I would say that the hardest piece and really what traditional automakers are best at, right, is the ability to manufacture. Like there's a saying that it's harder to manufacture a Ford Focus than it is a Ferrari. And that Ford Focus, right, to manufacture 1,000 or 1,500 of those a day. So having one roll off the assembly line every 60 seconds and be able to make, make up a number, $1,000 a car on every single car is a much harder problem, really, than the designing the best technology, vehicle, and putting in the best technology and having a really high price point, right? Like it's a different skill set, but between the two, actually, like the ability to manufacture is an incredibly challenging competency to develop at scale like that. So from so I do think that it is an interesting moment where there is some technologies that are out there where there could be some interesting partnership going on, and we're seeing some of it already with standardization that's coming to the space around like charging ports and other things. So it'll happen over time, but it's that manufacturing. There's like the technology piece, and there's that manufacturing side, and it's a little bit of the the race between those two competing forces. Uh, Within the manufacturing world itself, the biggest trend that I'm seeing is around robotics and automation, and I think we're at a really interesting moment in time there. As another really mega trend that's tipped only in the last um, couple years, really, and I think there's a lot of legs around this that there hasn't been in the past. And so yeah, I'm happy to to share more on the what all's going on in the robotics and automation and AI space, because there's that's really transforming a lot of manufacturing and logistics that we're seeing today.
For sure, please do, because after 27 minutes, we finally got to the AI part. In 2024, I feel like we're moving on a slower pace. But I wonder, when it comes to robotics and manufacturing, there's obviously AI is a really big component, but I feel like AI is primarily still on the software side. How does AI kind of transform how people or how manufacturer produce different things from the hardware perspective?
Yeah, yeah. So, I mean, some of the more recent breakthroughs in AI are only just starting to really filter into the robotic space, and there's a really interesting opportunity that's happening around that. Um, if I was going to boil it down, I would say what AI has sort of done is move the bottleneck from the software to the hardware.
Mhm.
And what I mean by that is, traditionally, most industrial robots, particularly in assembly plants, it's highly automated, but there is no stochastic decision making that's happening there. Like those robots are planned, down to the centimeter in terms of their movement, like the welds that are being done, the components that are being assembled. All of that is pre-programmed and in excruciating detail. And so these trends around like autonomy and decision making is really, again, like coming down the cost curve, and we're seeing sort of an explosion on this on the software and AI side that's filtering through on the hardware piece, and that's really leading to this tipping point. Both, I mean, there's the generative model piece, but then there's also like just traditional autonomy that we're seeing a lot of traction on right now. And that sort of tipped into this place where it's actually become less expensive and advantageous to automate with some of these more vision systems and AMRs to add autonomy to your factory. So
I have a question on this. So you mentioned autonomy decision making. So, right now people are using, let's call like ChatGPT to like help them, I don't know, write an email or like doing something along that line. But I feel like to producing a hardware pieces that costs a lot of money, and which part would be autonomous decision making in this process? Because I would feel threatened if it's, as like what if there's kind of like a miscalculation or hallucination on a particular part of my vehicle, and while I was driving something broke, or like those are really scary things. What's the current producing process from a manufacturing perspective, and how does the autonomy decision making kind of play in the manufacture um, processes?
Yeah. Yeah, so the way that it works today, I mean, these autonomous robots, in the manufacturing context and logistics context have onboard compute, and that's like the brain that's taking in all of the inputs from the sensors on the robot and and making sense of that, right? Looking at those patterns, identifying things, making decisions, and then that pushes through the controls, and then your robots then acting autonomously, if I was going to try to really simplify it.
Mhm,
And so part of the cost calculation that needs to happen when you're looking at like robotics is the implicit cost of what happens, of the cost of being wrong, right? And so if you have an autonomous lawn mowing robot, or something in an agricultural field, right? Like the cost of being wrong is relatively small, right? Like you miss a patch of the lawn, right, like miss, some of the soybeans that are out there, right? Like it's a much lower cost than say on the total opposite end of the spectrum. If you're talking about self-driving vehicles, if a vehicle malfunctions and God forbid somebody gets hurt, and so there's this like to kind of break it down, right? Like you could say like there's a probability of being wrong, and then what's the cost of that, given the fact that you might be wrong. And so for autonomous vehicles it's quite high, and that's why they are fairly highly regulated, and lots of data has to be reported back. And the performance of these today is already exceeding what the number of incidents per 1,000 miles is already far lower than where humans are today. But the emotional shift of giving up and not having the control of, or having a human have control, is really the biggest leap. So, and nobody wants to get into a vehicle that could potentially be dangerous.
mhm,
So the standard of where they are today and where they're going is really very high. But
mhm,
the cost of being wrong, if you will, in the manufacturing environment, it's sort of in the middle, right? Where it's like, oh, you might wreck a trailer, or you might wreck a really expensive robot or something. But most manufacturing sites are very well, there's lots of safety protocol, you've got lines on the floor that humans aren't going past, there's process in place for how close you can even interact with a robot. So the cost of being wrong in that environment is sort of moderate. And so we're just seeing a lot of these tip over. And with the hardware costs that have come down so much, and the performance you're getting from the software and autonomy stack is getting so good, like that price performance trade-off is really pretty impressive. And it's coming up the curve of these low impact, or low cost of being wrong use cases, like those lawn mowing robots, like the parking lot security, like hospital supply running, and some of these use cases on that piece. I'm seeing it especially then on the industrial side, where it's just now tipping, and the business case is there. And then we're also seeing, of course, like on the autonomous vehicle side, Waymos are up and running. Our portfolio company, May Mobility, has one or two sites where there's no drivers, around the country that they're operating in. So that's also happening, as well. So just all at different speeds.
I have a question on the car safety part. So, for a regular smaller car, there is like the front, the engine, or I don't know if the engine was there, but like, so like in the front window, there is kind of like this long of a buffer-ish thing. So if you shrink that, will it make the car safer? Or like is this like a necessary kind of component for the car?
Yeah, so I'm not sure exactly the component there, but I think the way vehicles are designed and tested today,
Mhm,
it's really amazing to see the safety protocols that they go through, and just the lead times around all of this stuff, right? Like, most OEs have their 2028 technology stacks already locked in for the vehicles, right? And now it's just about tooling up manufacturing facilities, you know, building out the supply chains,
mhm,
and so because of that, right, like all of the rigorous testing and stuff that happens ahead of that is already happened in those vehicles. So today, the crash testing that's done, while it doesn't really look like it, but the whole front of the vehicle is designed to really fold in
mhm,
and absorb the impact of a crash. And so the safety around these vehicles today, it's pretty incredible,
mhm,
relative to even where they were 20 years ago.
mm. I wonder from a manufacturing perspective, if a startup is producing a car full stack from like everything, basically you like reinventing everything from scratch to make it more intelligence. What does that kind of look like compared to a car that's produced like traditionally today? So what does like a full stack AI-ified production manufacturer kind of look like compared to the regular? Sorry, I have repeat myself, but
Yeah.
yeah, I want to make sure the question was clear. But anyway.
Yeah. So yeah, I think most vehicles today have software that sits in a lot of different places and a lot of different microcontrollers that exist in the vehicle, and you could fully redesign the vehicle to really only have one software brain that's running throughout it, and continuously making decisions about everything from the infotainment to the traction that's getting pushed into which wheel at which time. So there's opportunities for, if you're going to vertically integrate, kind of full stack, start over, to probably streamline all of that software. Now, you may not want to have your controls software in with, say, your infotainment, right? Because you may want it air gapped to, or very, very tightly controlled interfaces, um, to the external world, if you've got access to the actual controls of the vehicle, right? But so there's some level of integration around the software that's happening and can happen. You've got, of course, like, the autonomy stack that can come into the vehicle, and there's a few different approaches that are being employed by different providers today, right? Like Tesla famously isn't using lidars. Many other providers like Waymo or May Mobility are using lidar. Um, so there's the stack that goes into the perception stack and autonomy kit that needs to come in, and then of course, like, this changeover on the electrification is a very natural, um, uh, you know uh, separate trend, but a natural extension of the autonomous vehicle, because now you can have the vehicle that's moving around, it can go charge itself, right? There's a lot of synergy between those two big, technical waves that are taking place. So yeah, those are probably the key areas that there's some interesting room around.
What's the difference between using a lidar and not using lidar?
It's basically the input data that the autonomy system is able to analyze and make decisions around. And so the LiDAR provides a very detailed view of the world, where in much more three-dimensional than a camera, right? That's really just taking it in two-dimensional. And so, there's arguments on both sides. The part of the thing with the LiDAR is just it's very expensive. The cost curve is also coming down very much so on the autonomy stack fully and LiDAR specifically. But cameras are exceedingly inexpensive relative to LiDAR. So yeah, it's really about the level of decisioning that can be accomplished given the inputs. So if you've got a better autonomy, decisioning tool, perhaps you don't need it, or perhaps you won't quite achieve the same level of autonomy without it. So those are sort of the two races that are or a race that's being run right now in that world.
Mm. I wonder, when it comes to like the future of mobility, what are some major trends that is happening in the industry? Obviously, I feel like all the vehicle are becoming more cleaner, but from the format, I went to the Deep Tech Week a few weeks ago, like a month ago. So there were, flying vehicle on the water, and then there is, obviously like the Blade-ish company exists, like, making flying somewhere a lot cheaper, like a private plane, a lot cheaper. What's your thought process on like, what does the future of transportation look like? And where do you feel like people are not aware of? It's like a gap.
Yep, got it. So, um, yeah, I mean, there's just a ton that's there. The EV tools, these electric, vertical takeoff and landing vehicles. Our fund hasn't made any investments, into that space yet. Other automakers are certainly participating in that space, and other mobility investors are, and it's a very exciting one to see what they've developed. Um, I think ultimately it's sort of a retooling of how you think about mobility in some geographic domain, and within that, there's a lot of new tools that are coming out that can meet different use cases for different folks. And so, an eVTOL might be an important piece of that as start to alleviate some traffic and have dedicated, airspace for particular movements, right? Like, I mean, in the Bay Area, it's not hard to think of how how that could be nice to be able to move from one side of the bay to the other, and avoid some of that traffic on the 101. Similarly, I think, business models, right? Like mobility as a service, public-private partnerships that are taking place right around those vehicles. Obviously, I mean, like rideshare or micromobility are well-known trends that have been around for some time now that have reshaped some of that. So there's a lot that's happening, and I think that it's really going to be driven by, first and foremost, is going to be the demand on the use case side. Like, what are these use cases? And that's going to depend on the geography of the domain that it's being deployed in. And then you're going to have, from the supply side, what's the cost and how is it funded? And so some of these may be able to be funded, directly, like, from consumers. You may have public-private partnerships and other, municipalities, right, that look at part of a mobility and transport solution to add in things like autonomous vehicles that can take you from A to B, in areas where maybe you don't need a whole big bus that runs at 5% capacity on some certain routes. So there's a lot that's happening there. And yeah, you could spend a lot of time on any given one of them, but I think it's going to be geographically driven and this suite of solutions that can kind of be deployed. And then it's a race down the cost curve on all of them to kind of see where and when they really start to present themselves.
Mm. I want to dive a little bit into like the BMW I Ventures investment. So you guys recently invested in Run Safe Security. Why don't we talk about in general, like what are a few, maybe we could start with like, what is BMW I Ventures like typical investment strategy or like general sector that you guys are interested in, and then maybe we could dive into why maybe cybersecurity software is a really important segment for you guys.
Yeah. Yeah, so the way that I like to describe it is anything if you can squint and it's related to the automotive ecosystem, it's in scope for us. So we look at a lot of different things.
Mhm.
Uh, our model is a bit unique when it comes to corporate venture groups because we're set up and structured as a completely independent fund. So
Mm,
BMW is the sole limited partner in our fund, and we're managing it through a general partnership. And so from that standpoint, it's really arm's length decision making from an investment committee standpoint, similarly from a commercial standpoint, right? So I don't have direct influence over BMW adopting, any of our portfolio companies' technologies. Now we have a platform team, right? Like we have visibility to the through the highest levels of the organization. We can
mhm,
kind of work to with we work and do work very closely with our companies to find those opportunities, but it's not a strategic first decision making model that we're working through. So really a much look and feel is much more institutional, but with a deep expertise around this ecosystem.
mm,
Within the the various areas, yeah, we'll look at stuff from enterprise software. We will look at hardware, both at like system and chip level. We'll look at car components. We look at new materials. We look at, of course, the battery supply chain and battery technologies that we've spoken about, and then everything in the industrial and supply chain worlds. So cybersecurity is an important piece of that because and there's sort of two or really three areas that are interesting, and it's around both from the enterprise standpoint, right? Like the automotive companies are, large enterprises. They've got lots of data. There needs to be protection around that. Two is, and these two and three are really where we're spending some more time around, where there's been some pretty interesting breakthroughs, but around the edge devices, which you can kind of break up into both manufacturing environments, because everything's really connected, through a network now, and then into the vehicles themselves, and where the vehicle connectivity is this newer trend that's happening, and you can imagine a world where you're trying to send these data packets to other vehicles, or to satellites, or to maybe connected infrastructure within a city, and you need to have all of that highly secured. And so we're spending time, as one vertical that we look at as cybersecurity around edge devices.
mm. Um, what is edge devices meant? Like I know that like an AI edge is like very, I would define it as like a I guess like frontier, but like I wonder what's your like what does it means for like edge devices in the car industry?
Yeah. Yeah. So, I mean, generally, data is essentially sent to a central server, right? Like in the cloud. And so an edge device is essentially something that has the compute local. And so
Mhm,
an edge device, right, in a vehicle could be an edge device because, if you're doing the compute, um, there locally, right? So now your vehicle is an edge device. Edge devices also, like in a manufacturing context, could be robots. They could be just other types of sensors in in the manufacturing environment, right? That are maybe looking at, are people walking into the wrong place? Does this door open and close when the robot comes to it, right? Like all of this stuff is connected. And so if you've got edge computing, it really just is a term where you've got the compute local to where the workload actually is.
Meaning like, so basically, does it connect to the data server? So like, or how, like, I guess, does this means like basically it's just um your data was uploaded in the cloud, and then from there the decision was made over there to your device?
Yeah, so so an edge device could, also have networking capabilities, right? So, for example, your phone is an edge device, and so your
Like
phone
a
has
list,
local
right?
compute.
Yeah. So
Yeah,
okay, so
so
you
you
can
could
use
process, right,
it.
like workloads on your phone,
Okay.
and then you could imagine like, oh, if I've got a really big workload, that might get offloaded to the cloud and sent out there. So,
Okay.
today,
So
right, like ChatGPT isn't running on your phone. It's running off in the cloud, and so it's pinging those servers to run those workloads.
so does my phone consider as an edge device?
Mhm.
Okay,
Yep.
I'm sorry, but I'm like, I thought it was
Yes,
sort of
it's a very generic term,
it
and
is
it
real.
really encompasses anything that's not computing. Any local sort of device that has compute attached to it that's being done locally.
Okay, so I have, like, maybe we can do one real question and then 1 minute fire round because I want to be mindful of the time.
Yep.
So one real question is like, what's your thought process on the future of like automotive in humans' life? I know that sounds so vague, but I've seen a lot of people started making hardware devices that could control everything. Do you see people just sitting at home, and then when you, let's say, you want me to deliver something to you, and like that's a 40 minutes drive. So instead of me driving it, I put my stuff into my car drives to you, or like, what is the future of automotive kind of mean for you?
Yeah. So, yeah, this is my own views. I mean, it depends a lot over the timeline, right? But let's stretch it out over like 20 years,
Yeah.
because it's the stuff is going to take time, especially in this industry. Um, so let's start with like a 20-year time frame. I think that's where you're going to have more of a bifurcation that takes place between vehicle ownership and fleet ownership. And so today there's already fleets, right? There's already, most people or a lot of people own vehicles. Um, I think folks are going to continue to own vehicles. People want to have the vehicle that's essentially available immediately. They want the freedom to be able to do things, right? But it'll move to a little bit more of a luxury good than it is today, as you really bring down the costs of the hardware and the performance of that hardware for the relative price. So,
Mhm.
autonomous fleets, right, is a very particularly in urban environments. Like in urban environments, fleets that are running, like you see Waymo already starting to do today. That's probably a durable trend, and there's a lot of stuff that's going into that in terms of improvements in sensor fusion and compute and autonomy and AI. And the cost of components. So yeah, I think you're going to see that bifurcation take place a little bit more, particularly again geographically defined. So urban is going to be first, because of the density, and then further and further out, you're going to have more and more folks that will, the demand will be higher to and less of a luxury good to own the vehicle. Two, I think you're going to see connected vehicles much more integrated than they are today. Again, like this is a longer time frame, but where you are going to have a more coherent communication protocol between all these devices and vehicles and infrastructure within cities. So I think that's another place where this that you'll see. Uh, Automation will be a large driver as well. So certainly, where you'll see a lot more autonomous robotic solutions within these supply chains and within the manufacturing context than you do today. So yeah, those are, and then of course, like electrification, I think is a really big one, and the key around electrification is really, I mean, there's a few bottlenecks, but a big one is range on the personal ownership side. Like when you can quell the range anxiety with 600 miles, to a charge,
Mhm.
like that, it starts to solve infrastructure problems. It starts to solve a lot of, the anxiety and um, the consumer anxiety around that. So, from a fleet standpoint, the range might not be quite as relevant. So you're going to probably see multiple types of battery chemistries that ultimately come to market. LFP is going to be an important player there, particularly I think on more fleet side. And then you'll have other types of chemistries that will be more performant vehicles and longer range vehicles and stuff. So just like today, where you can buy a vehicle and select the different powertrains within it, right? Like you can buy the name the vehicle platform, and you could do a 4-cylinder, you could do a 6-cylinder, you can do the 8-speed or the 6-speed transmission, right? Like there's different combinations of powertrain in these platforms, and so you'll likely see that similarly with batteries, that you'll get to a certain scale where those will the cost makes sense, and then you're gonna again see like competition that'll take place instead of on just pure price and quality is going to be around some of these various use cases and like a variety of different options that tailor in for specific folks needs.
Mm, I love that. I especially I'm very excited about the battery life getting longer. Like 600 miles is very important. As I definitely, as a customer, I definitely have anxiety attack every time I come to SF from the South slash East Bay. I feel like that's like a really amazing feature to imagine to have. So I want to end with a quick 1 minute fire round. I know you read a lot of books. What is the what is one book that made the most amount of impact? Or maybe since you mentioned a bunch of books last in like another podcast, why don't we could also just tap into maybe what is a book that you're currently reading?
Yeah. Yeah. So, well, I think one that's had an impact on just my overall view of the world and really economics specifically is Seven Powers. So this is by a Stanford professor, and it essentially just breaks down the sources of economic sustainable competitive advantage into these various buckets, and it's like they either create benefits or they create barriers, and it's a nice easy framework to really well, I should say intuitive framework to work with to quickly assess companies, and so I think through that a lot, especially because the areas that we're investing, right, they are capital intensive and they are complex value chains, and so value accrues in very different places. And so having a real informed view of where that value is going to accrue is critical. And so that book in particular has been influential for me.
Mm. Who made the biggest impact in your career?
Oh, well, I've really had a lot of folks that have spent time with me and helped me develop and provided a lot of exposure to various projects. So everything from I had two bosses at Fiat Chrysler that were very influential for me, Scott Grissom and John Bonadonna. They were quite influential when I worked at Truck Hero. Jeff Van Dyke and Jim Bresingham were very, again, like gave just a ton of opportunity and I learned a lot from them. Um, my dad works in business. Like I always like, batted around business ideas there. Here at the fund, working with the partners that are here, Casper, Marcus, and Barish are all, really, they're all different investors and have different views of the world. And so being able to sort of fuse all of that together. There was folks at Jefferies when I worked in technology investment banking. Oh my gosh, like Suzanne that I worked for at a private equity fund that I interned at in business school. Scott Meadow I worked with at University
This is
of
the
Chicago.
longest people
Like,
I've
there's
been.
just so many folks that have had really outsized impacts on my career, and so I'm very grateful to a lot of folks for that.
Well, you should send the shout out part to them because this is like the most comprehensive shout out list. Um, who would you invite to your dinner party?
Who would I like to invite to a dinner party?
Yeah.
I'd like to get all those folks I just mentioned into a room. I think that'd be a pretty fun dinner party.
I
But
feel like that's called the automotive conference. So
yeah, there you go.
basically, that you have the whole panel there.
Yeah,
Yeah.
yeah.
So where can we find you outside of work?
So I spend a lot of time hiking and in outdoors. So with the family here. So I'm married and have two young kids, and so we take them and put them in the backpacks, and we go out here and hike in Marin County, or when we're lucky enough to have the time over in the Sierras. So love the outdoors, and then just hiking in this beautiful area.
Went to the Muir Woods the other day. It was such a nice experience. And well, Scott, thank you so much for coming on the show today. It was so fun chatting with you. And I feel like you just gave us a quick masterclass of AI and the future of mobility.
Absolutely. Well, thank you so much for having me. It was a pleasure, a lot of fun, and yeah, look forward to doing it again sometime.
Amazing. Okay, let me just quickly end stream.